In this video, I'm going to talk about how to fill out the form W-4 if you are married and filing jointly. So when you are married and both your spouse have a W-2 job, you decide to file income tax jointly. How do you fill out the form W-4? So what is a W-4 form? So if you get a job with an employer in United States, you most likely you have already filled the form W-4. At the beginning, you may, employer throw you at so many different forms. One of them is a W-4. The W-4 is basically you as an employee. You tell your employer how to hold your taxes on your wages. So in United States, all the employers are required to withhold income tax on employees' wages and salary. So this is required by law. So employer has to withhold the tax. However, employer will not tell you how to fill out the form W-4. As an employee, you are responsible to fill out the W-4. Employer cannot tell you, what's your filing status or how much tax gonna withhold. So you as an employee, it's your responsibility. Your employer cannot give you tax advice. That's something you have to understand. So then that's the thing to understand. Then when you are married, the most situation, if you are, single or any other, married or filing separately or head of a household. So any other filing status relatively simple, straightforward if you only have one job with one person, right? So then your situation get complicated when you are married, filing jointly, both spouses have a job. So then that situation get complicated. So the W-4 form become a little bit complicated for you. So here I want to quick mention that many people, they will say, I just want to responsible for my own taxes, even I'm married. So I'm just gonna do married filing separately. Here I tell you, married filing separately is a very, very bad filing status. You can go to IS publication 17, page 23, married filing separately special rule, to read the list of the things IS states that you are not eligible for many tax credits and many tax deductions. So basically, if you choose married filing separately, you are just to give up so many, tax benefits. So that's something you should understand. Married filing jointly, you will enjoy many, many tax benefits. So, however, we need to figure out how to withhold the taxes. Here's an example for married filing jointly. So Jing and Joe, Jing age 52, Joe 47, they're married. The following is their income situation for 2022. They are paid every 2 weeks. So they don't have any dependents. They're not eligible for any additional credits. So that's all their income. Let's look at Jing first. Jing annual salary 200,000. Then Jing made a 401k and HSA contribution. Because her age is over 50, so she is eligible for additional catch-up. So her contribution are maxed out. So those are sheltered from taxes, right? Her gross pay minus all those contribution will give her AGI, adjusted gross income, which is this amount going to be subject to tax. Look at Joe. annual salary and the contribution to 401k HSA. So the amount tax subject to tax is amount income subject to tax is 55,900 here, right? So total their AGI is $224,300 dollar. So those are their financial situations. Okay, based on this, we can simply calculate their taxes, right? Because this is income tax, so they don't qualify for any credit or any deduction. So it's very straightforward. So their AGI here, then minus standard deduction, which is married filing jointly standard deduction. This then get taxable income. On the taxable income, we apply for the tax brackets. This is married filing jointly tax brackets, right? We would calculate their tax liability for 2022 is 35,287. This is their tax liability. So no matter how much the employer withhold the taxes, so this is the fact. This is among the taxes they have to pay in 2022. If their employers hold taxes less than this amount, they will owe taxes, right? If their employer hold taxes more than this amount, so then they will get a refund. So that's so simple. So now we know their tax liability total is this amount. Then how much? The question is, how much should Jean's employer withhold the tax on her each paycheck? So those amount taxes, right? How much should Jean's employer withhold the tax? Same question. How much should Joe's employer withhold the tax? Joe has less, income. He should withhold less taxes. Jean has more income, should withhold more taxes, right? Then how you are going to do this? So that's why we need to talk about the Form W-4. So here's the Form W-4. Employee withholding certificate. So you can see it's only one-page form. It's very simple one-page form, right? So most of the people, they just filled out the step 1. So for the form, for most people, it's very simple. If you're single, you only have one job, you just fill out the step 1, fill out your name, your social security number, address, then you check the single, then go to the bottom, sign here. Then you are done. Give to your employer. You are done. However, when you are married, so here they have a married file jointly. So if you are married, you just check this box, then you sign here. Then what happened? Only check this one. It means only one spouse working. So when you both spouse working, if you check this one, so then you will withhold little taxes. Let's say Jean filled the W-4, only do the step 1, step 5. Step 1 only check the married filing jointly, right? So then what happened? So basically say Jean, that say Jean's salary is this amount subject to tax, right? Then Jean gonna use the standard deduction. Then taxable income is this amount. Then you use the married filing jointly tax bracket here. You can see the standard deduction, married filing jointly standard deduction, married filing joint tax bracket. Then you get your employer will withhold the tax amount 22,584. So that's Jean's employer gonna withhold the tax. the same thing. If Joe did the same thing, filled the form, check the married filing jointly. So Joe will, the employer will use the standard deduction is this amount. Married filing jointly standard deduction, married filing joint tax bracket. Then Joe will hold the tax is 3,189. You can see. So the total tax withheld is only 25,773. What did we calculate their tax liability? So earlier we calculated their tax liability. Total is 35,287, right? Then they only withhold the tax only 25,773. So the old tax at next year in April when they file tax, they will find out the old taxes is 9,514. So that's the problem. Let's look at why it's a problem. You can see both Jing and Joe, they use standard deduction. So you only eligible for one married filing jointly standard deduction. So, but you both use the standard deduction, right? So use double standard deduction. Then also you can see when first income, so this tax bracket, when your income, so when you have additional income, what are the income going to be taxed? Taxed at the marginal tax rate, right? So Joe's income supposed to tax at a higher tax bracket as an additional. However, Joe is going to be use the lower income tax bracket as well. So that's why two things to cause they hold the tax so little. So that's why it's a problem, right? So you cannot just fill the step 1, just check the married filing jointly, give to your employer. That's just cannot work. So then you have to fix it. So I'm going to show you how to fix this. Before I show you how to fix the problem, I just want to show you how to use the IRS tax withholding estimator to confirm my work earlier. So all the numbers, why the numbers make sense, okay? So this is the IRS tax withholding estimator. You can simply just go to IRS website to search the tax withholding estimator, so you can do yourself. So here I'm just gonna quickly show you based on Joe and Jing's their financial situation. So I'm input their information to estimate their, if they only file the W-4 form, check the box on the married filing jointly in the step 1. That's all they do it to submit it to their employers. So that's what happened. So I'm going to show you. So this tax withholding estimator say, first, you basically information you're married filing jointly, then you regularly have your employer withhold your federal income tax. So none of these things apply to Joe and Jing. So they have 2 jobs for income and withholding here. So first job is salary, then all year, then they're paid every 2 weeks. Then their pay period. So until now, so when I'm because I'm doing these taxes kind of around November. In November, so that's why I'm using all those things, because the calculator will be updated in each year, right? So you have to use the current year in order to calculate the estimation. Otherwise, the number will be a little off. So that's all the number I'm input in here. Then they will tell you. So you can see once you input all this number, they say based on the information provided, it looks like your spouse income from this job is $200,000. You can see, so Jean's income is $200,000. So you can confirm that that's correct, right? So then input your federal income tax withholding for one check period year to date. So then you have the 401k and the HSA withholding, you input all those numbers. So in reality, if you have your pay stub, you can import those information from your pay stub to estimate your withholding if it's enough, right? So then the second income, so is Joe's income is hourly job, then all year paid every 2 weeks. So that pay period, then wages. So they estimate Joe's annual income is $80,000. This is correct. So then you have the federal tax withholding. So based on your married filing jointly, right? So then you and your spouse contributed to 401k to HSA. So then none of these apply to you. Just go next. So none of this adjustment to income apply to Joe and Jean. So Joe and Jean gonna use standard deduction 25,900. So you can see here tax credit, no tax credit. This is the result. This calculator gave to me. You can see. So if they only check the box on the W-4 married file jointly, each of them. So they expected annual withholding together is 25,000, about 25,000. So you can see it's very close to my result. Then the total, their annual taxes, old federal tax is about 35,000, is very close to mine. So they will owe $9,000. So about $9,000. So you can see this is very close to my result. So they give you all those diagnoses, what's going on here, your withholding. Then they have a detailed information here. Your total, their gross income is $200,000 plus $80,000, $280,000. Then your tax contribution to the 401k and the HSA. So your taxable income is like 224. It's very close to mine. I show you their AGI, right? So that's the estimate. So you can see here, this is exactly the same with I calculate their income tax. So because their total gross income is $280,000, more than $250,000, they subject to 0.9% additional Medicare tax on the excess amount. So they owe a little $196,000 additional Medicare tax. So that's something here. So you can see the result is pretty consistent with I calculated with my, simply use Excel spreadsheet. So it's pretty accurate, right? So basically, I just want to show you here when you fill the W-4, when you both spouse working, only fill the the step number 1, married file jointly for both spouses. That's the problem. You owe huge amount of taxes when you filing your tax return in April, right? So we need to fix this problem so that we need to look further in the W-4 form how to fix this problem. Okay, on the form W-4, so if you are married, both spouses have a job, so then you cannot just fill in, the step 1, married file jointly. So we learned that you cannot just fill this part. You have to go a little further. So you can see step 2, multiple jobs. So multiple jobs usually is like even a single person if you hold like 1, 2, or 3 jobs, in within a year. So that's why you need to go into use the W-4 form used here as well. However, in this video, I'm only talking about the spouse. Married file jointly, both spouse working. You can see here spouse, all spouse working. So you and your spouse both working, right? So if you look into this form here, say complete the step. This step if you hold more than one job. So we only look at it here. Married file jointly and your spouse works. So we only look at this one, right? So here they tell you is only do one of the following. Only do one of the following. That's A, B, C. So A is use the estimator of withholding. So I can show you how the IIS withholding estimator works. So B is use multiple job worksheets on the page 3. So those, if you look down, those worksheets here, you can use this worksheet to fill it out. Then C is if there are only 2 jobs total, you may check this box. So you can simply by checking this box to solve this. They say this option is accurate for jobs with similar pay. So we're gonna looking into this one. Okay, let's look at the situation. Say you filled out the step 1, and step 2, C. You check this box. What happens? So here we talk about Jing and Joe's situation again. So they are married. So both Joe and Jing, they can fill the W-4 form. Then just check here, fill out the personal information, check married file jointly. So if they only, we talk about this, if they only filled this one, so they will owe huge amount of taxes. So they have to go step 2. Step 2, they have 3 options, A, B, C. The easiest one is C. Just simply check this box. Then IS tell you what does it mean check this box. Say if the box is checked, the standard deduction and the tax brackets will cut in half for each job to calculate withholding. Let's take a look at the tax brackets. So this is a single filer. Then married file jointly, right? Those are the tax rates. This is a 2022 federal income tax brackets. Let's look at the 10% tax brackets. You can see if you divide by 2 on this 20,550, you would get 10,275. So you would simply think, well, the married file jointly tax bracket divided by 2, that becomes single filers tax bracket. This is true for other tax brackets. You can check the number, divide those number by 2, you would get those numbers. However, it's a little bit different for 35%. So, however, this won't affect Jing and Joe's situation because their income is not as high as this much. So this would tell you if they check the box, so they will use the single filers number for standard deduction and the tax bracket. Here, the single filers standard deduction and the married filer standard deduction. You can see if you divide 25,900, that would be 12,950. So what does that mean for Jean and Joe? Let's look at it. Let's calculate the taxes. So for Jean, Jean's AGI is 168,400. And so this one minus the standard deduction, what is taxable income, then you use single filer's tax brackets to calculate the tax. The tax amount is 31,143. Okay, so if Jean files the W-4, use married file jointly, then check the box on the step 2C. So basically, the employer will withhold this amount of tax for 2022. Okay, let's think again. So that basically Jean will be holding taxes as like a single filer, right? Because use single filer standard deduction and the tax bracket. The same thing for Joe as well. So if Joe use W-4 married file jointly, check the box step 2C, then his employer will withhold tax is $5,066. So they both filing taxes withhold taxes as a single filer. So this give them total tax withhold is 36,209. Then would their married file jointly would calculate their really tax liability is 35,287. So if they withheld tax 36,209, they would get a refund in April 922. You would think that this refund is due to their married file jointly status, as they they withhold tax as kind of like a single filers, right? So this is kind of very good for both of them, kind of fair, because based on their, so if they are not married, they're going to use single filers status to withhold tax. So however, they will get some refund if at the end that's married filing jointly, right? So it seems like it's a best way for them to solve this problem. Just simply, on the step 1, you married filing jointly. Step 2 is check the box C. Then you will solve the problem. This is the best way to do for them because they are their income is relatively. Now I want to use the IRS website, the tax withholding estimator. Simply is on the W-4 form step 2A. So you can use the tax withholding estimator to estimate your tax. However, I just did if Jean and Joe they doing the step 2C, check the box. So then I'm based on that information, based on their information to withhold the tax, I want to see how their how is the tax withholding work out for them. So I'm gonna go show you the information again. So basically they are married, file jointly, so they both of the spouses regularly withhold the federal income tax from their paycheck. You're going to go to the next. So here is the income tax withholding. So for your first job, for Jean's job, it's a salary all year. paid every 2 weeks. So that's their pay every paycheck. Then year to date. So you can see they tell you Jin's annual salary is $200,000. So then this is very important here because I'm calculated their tax withholding per period is based on if they check the box C. So that's the tax they're gonna withhold. Year to date, you can see it's in November 15. So then I'm gonna do for the spouse until so they have a 401k. For Jin have 401k and HSA withholding. Then the spouse Joe's job, so it's hourly job all year, every week, every 2 weeks paid. So pay period end. So under the wages year to date. So here tell you Joe's annual income is $80,000. Then you enter the federal income tax withheld here. So then you have a 401k and HSA, those information. Then you're gonna go next. So none of the adjustment apply to Joe and Jin. So they will use the married file jointly standard deduction. Then we're gonna go, they don't have any other tax credit. So now you see the result. If you check the box on the C, so you can see they have a very healthy result. They will get 719 refund. Here I tell you, in my calculation, I only showing income tax. So you can see here because their total gross income is $280,000 is greater than $250,000. So they will subject to additional Medicare tax, which is 0.9%. So that's a little bit amount that will reduce their refund here. So my refund is about 900, so their refund about 700. So overall, so it's very accurate. Let's look at Jin and Joe's situation quickly again. So Jin and Joe, they are married, so they are married filing jointly. This is Jin's income situation, Joe's income situation. So their tax for AGI is $224,300. So this is exactly how much they owe taxes in 2022 for federal income tax. Then we talk about this one and say if they simply use W-4, then they filled the step 1 married file jointly and sign at the bottom. So then they both done this to submit this to their employer. So that will end up a problem because this one is assume only one spouse works, right? So that will end up the employer will withhold so little tax. So that because they both use married file jointly standard deduction, they both use the tax bracket of married filing jointly tax bracket. This would end up they owe huge amount of taxes when they file tax return in the next year, right? So that's the problem. So that's why we need to talk about, say, how about they do, they after they filled the step 1 married file jointly, how about they doing the B, they selecting the step 2B? What does this mean? Okay, let's look at the form. And Joe, if they choose B, say use multiple jobs worksheets on the page 3. So this is worksheet. This worksheet says if you choose the option step 2B on the form W-4, complete this worksheet to calculate the total extra taxes for all the jobs. Only one forms W-4. Right. The worksheet is identifies the amount of the extra taxes. So if they simply say if you go to the table, there's a table here. So their highest, so high paying job is there between this range. So Jean's highest pay job is between this range. And Joe, the taxable amount is between this range. Then you would give them is 10,540. So this you can see 10,540 is very close to 9,000 I calculated. So extra taxes, right? They say, okay, so you actually owe this much extra taxes. Then what are you gonna do? So you put it here, this is your actual taxes. They say, well, how many pay period you have? They're paid every 2 weeks, so 26 period. So you use this number divided by 26, you would get $405. $405, so they say you put this one answer, W-4, you answer extra withholding 405. So this one extra withholding you would only put on one W2, which is Jean's W2. How fair that is. So let's look at it. So basically say, well, Joe gonna enjoy their married filing jointly standard deduction under the tax bracket. Joe gonna pay less taxes. So extra all the tax burden gonna go to Jean. So you can see if you add $10,000, well, over 35,000. So the extra tax burden gonna go all to Jean. So Jean gonna withhold all that much taxes. So basically that's the main. If Jean and Joe are cool about this, so that's fine. However, if they are they just want to be fair, they say, well, Jean should have withheld the appropriate amount of tax reflected to her pay. Joe should withheld the tax to reflect to his pay. Then the B is good for Joe, not good for Jean. So that's basically the result. To summarize the entire video, so basically for Jean and Joe situation, they have to fill the step 1, so married file jointly. So they can use A to make more accurate estimation to how much to withhold. But for quicker way, they can use B and C. If they use B, so this is more beneficial to lower pay spouse. So basically, if you use B, you will make the higher pay spouse to pay the extra taxes. So that overall is disadvantage to high pay spouse, advantage to the lower pay spouse. So if you use C, it's relatively fair to each spouse. Also, it's a very quick, easy way to fix the problem. You just simply check the box here. So C is most, as I said, if your pay job is similar pay amount, it still works for Joe and Jean situation. So as long as you not huge difference, like if say it's $200,000 to $20,000 difference, so that kind of you will withhold too much taxes. As long as that is not that situation, you simply Actually, it's good for you to use C option here.